Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review on Wednesday, November 22nd. I hope you and your family have a fantastic long holiday weekend. For some housekeeping, we are going to be closed on Friday for the half day the market's open, just FYI. We'll be back at it again on Monday, although for Cabot Top 10 Trader subscribers, Monday's one of our 2 weeks off all year. So I might send an update with some updated stops or something like that. But there won't be a regular issue come Monday, okay? In terms of the market, no surprise. Nothing's really changed from last week. Intermediate term trend is still up. We have seen the number of new lows on the New York, kind of one of my favorite measures of sort of selling pressures on the broad market. Those have really come down nicely for the past 6-7 trading days, which is encouraging, okay? And so individual stocks continue to act well. So in general, the evidence is the same. On the flip side, we still have, I wouldn't say, a total limited number of stocks hitting new highs, but it's not a gargantuan amount. There are some stocks, like I'll show you, that have had good runs and are acting well, but they're kind of running into resistance here. So we'll see how it goes. So, at least on the growth side of things, we're kind of taking it step by step. I've kind of been open to cannonballing into the pool if we just saw a massive amount of breakouts. And we do have a lot of earnings reports next week, by the way, for some growth stocks. So we'll see. I'm open to doing that, but so far it's been more of picking your spots step by step and just trying to get some decent entry points in some stocks that we have some conviction in and seeing how it goes. Okay, in Cabot Growth Investors model portfolio, we've been putting like 5 to 12% of cash to work, every week. We're down to maybe between 40 and 45% cash here, closer to 45 probably. Like the stocks we have, hoping for some more, but we'll see how it goes. So right now, I am optimistic big picture. It was a great setup. We've seen kind of a lockout rally so far. We've seen leadership start to develop. So the fact that we haven't seen a ton of leadership, I wouldn't say is, it's not a yellow flag or anything. It's just descriptive, not predictive. It is what it is. So now we're just kind of taking it day by day, week by week, letting everyone else predict doom or success or talk about economic reports. We'll just take it day by day, week by week. And if things continue to progress, we'll continue to extend our line. Okay, so let's hop into the charts. As usual, I'm using MarketSmith. It's a product of Investors Business Daily. You can learn more at marketsmith.com and get out my trusty pen here. So the NASDAQ is the leading index. It is weighted, obviously, to the winners, but even if you look at sort of the NASDAQ unweighted, it looks pretty good. Came out of this downtrend line, hasn't filled this gap, which was a week ago on the big, I think that was the CPI report, right? And just continues to really stretch higher. It does have the feel, it's early, it's been 3.5 weeks here, but it does have the feel here where the institutions, after really a couple of years of not having a lot of conviction, starting to feel like there is some conviction there where they really need to buy 100,000 shares of these 10 stocks, and they're going for it one way or the other, and that's why you've seen almost no pullbacks to this point, okay? Either way, the NASDAQ is well above its moving averages, which is what I cue off of here for the intermediate term trend. Plenty of daylight here for the S&P 500, same sort of thing. Like a lot of stocks, we are kind of bumping into some old resistance. Maybe after the holiday, usually there's a bump here. Maybe you get some selling. So we'll have to see how we pull back. If we pull back, do we just get crushed? Do interest rates spike? But at this point, you kind of got to go with it. And right now, the intermediate term trend clearly up. And the same thing for the broad market. New York Composite, yes, there's overhead, but well above its moving averages. And even when you look at things like the IWM, which has, of course, been the weakest thing out there, this bottom 25-day moving average is turning up. That's what's key to us. MDY is the mid caps. So just running through these indexes here, they're all positive on an intermediate term basis. Okay. Moving on to growth stocks, it's kind of, they look more, they're kind of in between. They're in between like the NASDAQ, S&P, and like small caps. They're kind of in that middle ground where positive here. This is like the ARK fund, looking good, but not exactly. It's not like everything's hitting new multi-month highs. It's kind of back to where it was after the September rally. Okay, so there was a lot of damage here. It's repaired. So the action is good, but there's work to do day by day, week by week. Like I said, IPO fund, same sort of thing, positive, but not ripping higher. The IWO, which is small cap growth, it's going to be influenced by small cap. Looks like that index positive, but again, not ripping higher. So growth stocks are good. Like I said, I've written before, medical, retail, they're still trying to kick into gear. If the rally works, I think they will. So you want to stay on them. You don't want to just assume, there can't be any rotation into retail or anything like that. So you're seeing some improved breadth, improved leadership, improved action. Things are good, but I wouldn't say it's, it's not like we had a 6% correction after a nice bull move, and then we broke out and everything is running within 3 weeks. Not quite there yet, so just take it step by step, okay? Just to give you another, because I had this on my notes here, this is the RSP. Looks good. Again, the near-term action, you can't throw any stones at it, just a huge thrust, pullback, and all this. This is the unweighted S&P, and just kind of gravitating higher. So you can sit here and say, oh, there's this resistance, there's that resistance. So far, none of that has mattered. It's almost like most of the weak hands got shaken out. So far, so good on an intermediate term basis. But again, if you look at just, you don't even have to look at the big picture. It's been up here near 155 a couple of times this year. And here it is at 146, 147. So looks good here, intermediate term trend up. But let's see how it goes, week to week going forward, okay? Just a few things to run through before getting into stocks. So what I am seeing is more, like I mentioned, the NASDAQ and S&P are kind of back up to resistance levels, just prior highs, So here's like DDOG. Looks really good. In fact, it was in top 10. This was like the biggest, I think it was the biggest weekly volume ever, or it's been at least in 2 or 3 years. It was a big week volume and dollar volume. And it's acted well. Again, it's acted almost perfectly since, no ability to pull back. Let's see what happens, though. Do you start to hesitate in here? Do you want to just plow into it up here? It's a tougher call. So at this point, I would say, smaller positions and or aiming for dips, even if it's not I'm not saying it has to pull back 10 points, but even if it just cools off for a few days. Shopify is another one. Kind of some of these old, leaders you can see on the weekly chart. I mean, Shopify's high was whatever, $180, right? So we're still way under half that, okay? But it has sort of changed character here clearly after this huge shakeout below 200-day line, and it acts great, and it's actually kind of testing new highs here. So the question is, again, with some of these things, so keep your feet on the ground. I'm pretty optimistic, so I'm not even saying don't buy them, but I think whether you nibble or not, or just watch them, I'm sort of watching some of these as a little bit of an indication of like what institutions are doing. Does it pull back? Do they let some shares go here? After the rally, which is a lot of what we've seen in recent months, or are they hesitant to let any go because they think Shopify is going to $120 or whatever? I made up that number, okay? Now, diving into individual stocks, just something to keep your mind on. So kind of in the same vein, so I just wanted to mention NVDA today. The numbers are huge, which we know. I mean, you didn't know, but I mean, the stock has been acting so well. It broke out above some area here, 475, call it, and 500 is kind of round number resistance. It's wobbling here today. I think it looks fine. Again, I think the question is what do you see in these stocks that kind of test the old resistance levels? At this point, I'm not going to give specific advice. I think NVIDIA looks fine. Somebody asked me about it on our little webinar yesterday on Tuesday. I do think that with this shake, if it does kind of come out the top, it would be pretty interesting anyway. So the numbers there are good. Right now, it's just kind of a normal shake given the prior run. But this is another one of those names that kind of ran up into resistance. Now it's hitting a little turbulence, so let's see how it goes. In terms of some themes, I'll get to growth stocks too. I've mentioned like travel a few times, and it hasn't worked the last couple of years. People kept expecting recession and all that. We're now seeing some stuff. I think I mentioned Expedia recently, so 3 straight weeks of huge volume. It is off the bottom, but that bottom has been building for whatever it was, 9 months. So yes, it's different than if a stock just did this and bounced up, because it built this long bottom, right? So this, and it's out to whatever, 1.5 year long highs. It's pretty intriguing. Cash flow, there is some growth. It's obviously a big liquid name. It's a turnaround, but it is an intriguing name. Not quite as strong, but also just interesting. This is TripAdvisor. Just noting it, you're kind of, again, not as, I like Expedia's chart a lot better than this, but you do have some, big volume clues here. Somebody's been buying it, getting out above the 200-day, 40-week line, whatever, out to multi-month highs, just something like that. And then sort of maybe the best looking at all, this is Hilton. Hilton's not my kind of name, but, you have this big, long weekly base. This is HLT. And then it breaks out on earnings, I believe, right? I don't even know. No, I guess it wasn't on earnings. It was a few days when the market got going. And it's just been smoke up a chimney ever since. Okay, so that's pretty good. I mean, I don't think Hilton's going to go, double in the next 2 months or anything like that. But I do wonder if there's a little bit of a travel theme going where people say, oh, okay, we all know travel's been crazy expensive recently, and maybe it will continue to be, and that's going to benefit some of these companies, okay? Home builders I've mentioned before. I'll just mention, PHM. I do like it did kind of get out to new highs here. It could easily pull back some, but that looks good. Toll is the other one, TOL. Again, kind of out to new highs. It's an interest rate thing, obviously. If you look at the 10-year note, just for instance, a little bit of support today, but clearly a nice move below the 50-day line here. So the intermediate term trend is cracked. So you are seeing the home builders acting well. They'll be a little bit news driven. So let's see how it goes. If you're more of an ETF guy, I had someone ask me saying, I'm more of an ETF guy. There's nothing wrong with ITB, which is home builders, or XHB, which is more home builders and supply and stuff like that. They both swim pretty much together. But either way, housing is a group that it's not super sexy, but it can trend. And I do like the fact that you've seen all these sort of breakaway gaps almost, and really so far no ability to pull back. Again, it's like there's been plenty of opportunity in the last 3 weeks for these things to pull in, even for a day or two, just shake out or something, ahead of a report, some nervousness, and they haven't at all. Okay. Just random kind of a hodgepodge of list here. This is DoorDash. Uber looks great. That's kind of loosely connected, obviously, but just, it got destroyed during the bear market, of course. But it did have a persistent run here in the spring. The pullback was tedious, and it does move around. You can see it kind of pulled back in here, but overall it looks really good. New high this week. And again, just nice and tight in there. I'm seeing more stocks. It's a holiday week, but I am seeing some stocks that are starting to tighten up. You put another few days on there and you might get some real lower risk entries. This is MicroStrategy. This is a Bitcoin play. Maybe it's not for you. Okay. It's a super volatile. I mean, a lot of these stocks are volatile, but super, super volatile. But the stock can move. It's a little bit more of a trading stock, but you can see it can move up and down, but it had a nice breakout, nice volume cluster here. It has hit a little resistance. It's going to move with Bitcoin, but overall, the stock went from 320 to 500, call it, and it's just kind of gone straight sideways here for a week, going on a week and a half. Again, see if some moving averages can catch up if you're interested. It's kind of a interesting situation. Onto Innovation, ONTO, a little bit, it's a little smaller, so it's a little bit up and down, okay? But a very nice comeback here. This was an earnings reaction this day. And again, it's early. It's only been a week or so, but it's starting to tighten up here just south of its old highs. Chip Equipment has an AI angle. That's, some products that are very good for those to make and check those sorts of chips. So we'll see how it goes, but it certainly had this prior uptrend on the weekly chart. And you can see this volatility was very tedious, but on a big picture basis, not that abnormal given the market and the stock's prior run, okay? I've mentioned Lilly before. I do want to mention Novo Nordisk. Couple of things. Number one, so it's not as well, it's a foreign company, so it's not going to be as well sponsored, and it can be a little gappy because of what happens overnight, overseas markets, right? But number one, the stock, even though it hasn't really done anything, it's actually up. It might close up 4 weeks in a row. We'll see what happens at the close Friday. Number two, it's actually a little bit stronger. It actually tested, it actually hit new closing highs 2 days ago. So whatever that was, Monday. Okay, and it's just hanging around here. The RP line's a little, if you want to get super micro, the relative performance line's a little laggy here, but it's in an uptrend. It looks good to me. Okay, Lilly's not quite as strong, but again, I do think these are decent setups, and I think if you Lilly's got further to go, but if these things can come out the top, there's been some selling on the news of the approvals, and there's limited supply because these drugs don't just do weight loss, they do diabetes or whatever, So there's some headline, not risk, but some headline headwinds, I guess I would say. But I would say both Lilly here, which is pretty tight, and Novo, NVO, are still things I'm watching. And I do think, if you're talking about the biggest drugs in history, in a good market, the stocks could do pretty well. So keep an eye on them. I've mentioned aerospace before. This is ATI. This one seems to do well. When the market does well, it does well. You can see the stocks actually had a kind of a longer term uptrend. And now you have this nice new launching pad, aerospace parts and equipment. And I just it's had 3 straight weeks of big volume buying, 4 overall. And now it's again, you can see, not tight, but just a very tight controlled sort of pullback here, no volume. Yes, it's a holiday week, but overall, just something to keep your eye on. And again, with the tightness, this is more setups, and I got a few more setups before we go. It's easy. I could come on here and just say, like I did a few weeks ago, hey, it's, service now, look at this, yay, But the question is, what do you do with it? So trying to find some things that could maybe be actionable or things you're interested in that aren't, completely sticking up in the air. Hopefully things like now, they do shake out and they'll provide some real high odds entry points. So the ATI is one. And then here's ARGX, which is like a big, drugs have been, I mentioned Lilly, but they've been kind of out of favor here. But ARGX had this long consolidation kind of during the bear and this year below 400 ballpark. It had a huge gap on, I forget what data. Like, so the drug is selling, but there's like a million indications in the pipeline. And since then, it's just, that was the top. It was basically a 1-day move, right? Or I guess a 5-day move. And it got pulled down by the market. This was in July. And now you just see it's again, it's kind of tight in here. There's a ton of great sponsorship, like a lot of great funds own this. So we'll see. It's interesting to me. It's a higher price stock, $500, but I do wonder if it starts to round out here and some of these things like the drug sectors that have been out of favor forever, biotech, can get going, okay? And last but not least, just a couple of names. I just wanted to mention 3 names actually. So this is GitLab. It's not the best looking thing in the world, but they have earnings on December 4th. So it's in a couple of weeks. So to me, this is just kind of one of these very, 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 very long setups. And it's I don't want to say this is tight, but you can see this action right here compared to all this action back here, super sloppy. And I would just simply, I have it on a list. I'm not really super high. I mean, I like the company. It doesn't look like it's ready to go, but you get a big earnings gap up here, big volume, great story, accelerating growth, whatever, could be interesting. Okay, Elastic ESTC, Elastic. Pull up the weekly chart. Again, kind of this big long bottoming action. It did have a little bit, looked like a coming out party, basically September 1st. It gapped on earnings. It just topped out mid-October, so it's a little bit sort of behind. Like a lot of these stocks are 3 months into base building, like ARGX, right? This one just topped 6 weeks ago or whatever it was. It's only 7% off its high. It still looks pretty good. It's a little choppy in here, but again, they got earnings here November 30th. So again, you're just kind of looking for either a gap or some sort of, just see what happens. They can be a catalyst, okay? And then last but not least, well, maybe last and least, but I've been keeping an eye on this stock before I had gray hair, it seems like, but this is Snowflake. Data, it's a whole, it's basically another cloud software. It's a $50 billion market cap. And the stock got destroyed in the bear market. Again, it's had this forever basing period. And just recently, the look of this, if you look back here, the last time it's had an above average, not to get too in the weeds, but hey, it's holiday weekend. The last time it's had an above average weekly down week was here in June, okay? Not to say it's been under huge accumulation, okay? But it's pulled back in here. It's had some accumulation on stuff. It does have earnings here November 29th, so that's a week from today, so next Wednesday. So again, maybe this is the name where it might be down here and just forget about it. But if you do get a gap up, especially this is a very big liquid name with solid growth, earnings are coming on. Growth is slowing, but the stock is the stock hasn't done anything forever, so it's kind of discounted that. Now earnings are coming on. So it's kind of an interesting sort of recent IPO from a couple of years ago, 3 years ago, that if it does gap, maybe it's got some momentum behind it, okay? So just overall back to the market, I am encouraged. Sentiment, positioning, oversold in October, 2.5 years of glamour stocks being more than frustrating, you know what I mean? Unweighted indexes or small cap indexes not doing much for 2.5 years, that sort of thing. And now we're seeing kind of this lockout rally. Again, the NASDAQ's the best thing out there, but kind of a lockout rally. So I am optimistic at heart. I think it's just a matter of you don't want to wait for everything to look good. You don't want to wait for the next Fed meeting. I wouldn't ignore the evidence. But we are taking it step by step. And as some more leadership emerges, if we get some of these earnings gaps, if we see it broaden out to biotech and retail and stuff like that, I think that will be a sign to just continue to extend your line. Okay, that's all the time I have for today. Again, have a terrific long holiday weekend, and we'll be back with you in our offices on Monday, and I'll be back with you next Friday for another Cabot Weekly Review.